Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our commodity technical analysis update. We'll take a look at the dollar, the 10-year, 30-year yields. We'll work our way down through precious metals and the rest of the commodities that I follow. I'm going to interject my opinions here based off of the technical charting patterns that I see and the candlesticks. And we'll dive right in here, starting with the dollar. So I've got the dollar behind me. Today, very strong dollar. We're seeing insane amounts of volatility around the dollar, 10-year yield, and 30-year yield. It's an unstable. The stability here is not very stable in the bond market. And I think that's going to force them to do something with liquidity. So the dollar rocketing higher here. It's a bullish engulfing. We're getting buying pressure. So we came on back into that support zone. And it looks like we could potentially hit higher with this nice, strong up day, strong closing. We look from a longer term perspective. We got this long-term support resistance line that we're getting up above it. It's not out of, it still could pull back. We do have basically a decline in the opening and closing prices. The momentum is slowing down, but today's trading action definitely has a lot of strength behind it. And 0.18% on the dollar is a very strong day. The 10-year yield is rocketing higher here. So we are seeing higher yields. We're seeing a lot of bond selling pressure. The 10-year is getting a ton of selling pressure. The dollar's going up. And this looks ultra strong in terms for yields moving higher. Could there be a problem in the bond market? Yeah. There very well could be. And I see that the gold price, silver price, platinum price is going lower, but I think this is a head fake. That's what I think. But very much a strong 10-year yield. Bond prices rocketing lower. This is the 20-year bond yield. They continue to sell off. Momentum is lower. And then the 30-year yield is also heading higher. We're getting a gap higher today and a strong closing. The momentum it's definitely to the upside for yields. So TYX to TNX, this is that ratio that I follow. The ratio that I follow here, I've found that there's a good correlation when this ratio goes up versus down to the price of gold. When it goes up, it's a normalization of the yields. When it goes down, it means that it's being inverted and inflationary pressures are in the market. And I use these two just because I think they're the least manipulated out of all of them. And right now, we are still heading lower, which is an inflationary pulse, meaning that the inflation pressures are still in the market. And stronger dollar and the inflation pressures and the selling pressure in the bond market, I should say, it's inflation and selling pressures in the bond market. Gold doesn't like that. But I don't think necessarily that getting, again, this is for myself and my opinions. I like gold and buying it when it's low, not when it's high. So I do think that there's pressures in the market that will unwind at some point that'll make it very favorable for precious metals. The CRB index is just moving sideways. We are right at the support level that we're playing with. Again, it's highly dependent on oil and inflation. So looking at gold is heading lower today. We're basically kind of doing this double bottom. We got to get some support here. Otherwise, I think this is going to continue lower until we hit some buying pressure. So it's got a pretty good sell-off there. Silver still above support. We've got that long-term support line that still looks good, and we're just riding on top of it. Myself, I like gold. I like silver. I think the inventories are getting eaten up. And I think that the pressures that we're seeing are all financially driven. Eventually, the physical markets are going to override this. That's my take on it. And then we've got platinum. Platinum is down today. We are still in this kind of squeezing pattern up, and we have not broken out of that pattern yet. XAU to gold ratio is moving where the gold and silver miners are not performing as well as the underlying metal. So we are down a little bit today. Again, we have some work to put in here. for this to break out of that long-term downtrend. But what's important here, if you guys are listening or if you're part of the website, is you know where we're at. It's a roadmap. That's what's important. Now, looking at SILJ, the ETF, we are still riding on top of that support level. And I still think it looks okay from a valuation standpoint. Everything still looks all right. I'm just waiting for this price to turn around in the precious metals. GDX is also sitting there. It's almost as it's in a holding pattern where we could potentially work our way higher. And I think it's just waiting for the precious metals. But we're not really making too many new lows. The miners aren't blowing it out to the downside, at least not yet. So I think there's still some optimism there because we've broken this downtrend. We're kind of just basing out. And there's still the possibility of a potential move higher, but we just need to see that in the metals. Crude oil moving higher. Again, is this the low? I think we're getting close here. Again, that is just my opinion. The broken downtrend, we broke out. The second step is to create a higher low, and then the third step is to break this high to create a new uptrend. That is the definition of a Trader Vic a Trader Vic bottom, 1, 2, 3 bottom. But yeah, it's looking strong. It's not a reversal candlestick. I know that these markets are incredibly hard to navigate right now because we've got Biden and all these people trying to manipulate the price left and right, coming out with all this news. Short term, expect volatility. Long term, structurally, the market needs more energy by a long shot. I think we're going higher structurally. Same with natural gas. Structurally, I think we're going higher in natural gas on the long term. Short term, with Freeport LNG terminal being down, I do think that we're getting close to a potential bottom down here. We could even tag 480, 475, something like that is in the realm of possibility. But what you want to look for is are the oil and gas stocks trading like natural gas? The answer is no. People are acquiring them. So we're seeing strength in crude oil. We're seeing strength in the natural gas companies. And right now, it looks to me like we're going to try to break through this resistance line of about $147 or so. We're at 146.20. We're right underneath it. And we're going to see if we're going to try to break here. We've got a little bit of resistance coming through here. We've got major support and resistance lines at 175 and $100. That's where our major support resistance. So we're between those two support resistance lines for XOP. Yeah, you know me. Had to do it. Sorry, guys. OIH is also looking ultra bullish. This looks really good for OIH. We're breaking higher today in a pretty good move. And we're getting through some resistance. So the next line of attack here is this long-term resistance line. I'm going to put it on log real quick. And we're trying to break through it right now on a logarithmic scale. So I think energy services look really good. And I'm going to talk about that at our some of the companies that I really do like and reinforce the ones that I do like for the Platinum members today on our midweek update. Uranium, the futures pricing still looks really good. We're up 2%. I think this is 1 day delayed. I don't know what it did exactly today, but this looks ready to take off. And, you know, I know people are looking at some of the chart patterns on the individual companies. If the uranium futures pricing takes off, I think the companies will eventually follow. We've got the Sprout Physical Uranium Trust. It is heading higher. Let's go to the dailies here real quick. It's heading higher with some good momentum. We were slightly down today, but we break 1850. We can also take a bigger approach or a higher level approach where we hit some of the tops of these. I could raise this up a little bit, but 1850, $19, $19.50, somewhere in that range. If we can get up and close above those levels, we could see a big move in the physical pricing of uranium. And I think that's underway already. Uranium is lagging behind. It's got a little bit of the claws of the overall market stuck in its back, dragging it a little bit lower. But I don't see anything to worry about. There's small down days. It looks like everything's tightly controlled, and I think it leaves it open for the buyers to push it here if they want to. to the upside. CCJ getting a little bit more of a sell-off. We're still above that support line, and everything is intact as of right now. Let me get off logarithmic there. We're right at that support level. Scrolling down to TAN. TAN's a little bit more interest rate sensitive, I think. These guys aren't making money. They're probably borrowing a lot of money. I don't know how successful these guys are going to be in making free cash flow, because as energy prices go up and as commodities go up, I think their margins are going to get squeezed in solar. It's a highly speculative play, but I do think that money could slosh around in the system towards solar and renewables from governments around the world. But that's where we're at right now. We're just kind of at that support level. We'll see if it holds. COPX also heading a little bit lower today. It's just moving sideways for the most part. We've got the CRB to S&P 500 slightly up. Is this a double top in the short term where we head back down a little bit? It's possible. We'll have to see what happens with oil and some of these major drivers of the CRB index. We've got rare earth metals right at support. It's been sitting on support for a little while. We've got lithium right above support. Support's right underneath here for lithium, if it ever wants to decide to show up. There it is. The support coming back down through here. We've got major trendline support way below it at $38. Look at the S&P 500. We are lower today, 0.67%. Again, it doesn't look horrible. We've got two small little down days. One's an up day. Today's a down day, I should say. It still looks good to me for a move higher. Same with the NASDAQ. We have these bullish engulfings, this small little sell-off, and then that usually means that we still have some wind behind our backs. But we're seeing major price moves and yields higher, which is a headwind for this. And that headwind with a stronger dollar and stronger yields really didn't push this that much lower. So I'm thinking that there's strength underneath this market. If it had a chance to sell off, it would have been today, and it didn't really sell off. So I see strength there. EEM, yeah, it's down with a stronger dollar. It's as expected. We do have a bullish engulfing up couple days, trading days before it. XHB does not like the yields going up like it is. We were heading lower today, that's for sure. There was some data released on housing starts. It was a little lower. I think it was 8% lower, but we're still above the average. Given where interest rates are at in the mortgages, I would say that's actually pretty impressive for the housing starts, given how high they are. And then lumber's going on up here. What the heck's going on with lumber? I think they like that housing starts release. And lumber's heading higher, up 5.67%. If we were having this huge crash in housing and new housing starts, why is lumber going up? Good question, right? Cocoa futures slightly up today. It looks like a reversal pattern with the hammer. Hopefully it drops the hammer. Wheat futures slightly lower. I still think I'm kind of indifferent on this. I don't really see a defined path. We've broken this short-term uptrend line, but it's not really selling off much either. Soybeans moving sideways. Again, it's buyers are equaling the sellers, just in a sideways pattern right now. Same with corn, sideways pattern, small sell-off. I still think that looks good to go higher. And then getting a little bit of selling pressure in copper. I do think that we could potentially head a little bit lower to that support level underneath us. I can extend that over, and that support level's at about $3.25. Or slightly under it, $3.20. So we're just kind of making our way sideways here. Scrolling into MOO, this is the agribusiness ETF. Still looks all right. We're just chopping sideways, slightly lower today. Again, higher yields, higher dollar. Looking at aluminum, it's still at this support. We're right at support. It's just moving sideways. I'll make some closing comments on all this. And then we also have Baltic Dry Index right at support. A lot of these things are at support levels. But I will say that the markets are incredibly volatile. And I don't think we've seen volatility like this in the bond market. That's supposed to be stable. So I think that the liquidity in the bond market's pretty bad right now. And I think at some point, with the bond market kind of breaking overseas, and UK gilts is what I'm referring to, and even our bond market has been tanking. I think that this, I, I have a feeling, I don't, again, there's nothing substantiating this, that they're going to have to come out and stabilize stuff. And that means more liquidity, more inflation. So that's kind of what I'm looking for next, is a little bit more stabilization around the world. We'll see it. And if the bond markets continue to move lower and the yields continuing to move higher, I just think that's going to be a lot of pressure on the system. And I'm surprised that the housing starts were as high as they were, actually. I know they were down 8%, but I was like, really? Only 8% down off of a mortgage rate that's just been rocketing higher the past 6 months. So I would actually say that the housing market is strong given the increase in the mortgage rates. So we'll see what happens with the interest rates. We'll see if they go higher, if they go lower. We'll continue to monitor the housing starts. If I saw a number that was heading towards 1 million and going below 1 million, then I'd be worried. But we're right at average, and we could sit and move at the average for a little while before tracking higher in the future. So I'm still bullish on housing. I'm less bullish than I was before, given where the interest rates are and how things have slowed down. But I'm not in the bear camp yet. Not there yet. But that's what I've got. Hopefully you guys enjoy the content. Give me a thumbs up if you guys like it. Don't forget to subscribe to the channel. And if you guys want, I have a midweek update coming out today for the Platinum members on the website, finding-value.com over here. All right, guys. We'll catch you guys next time. This is Finding Value.